Good morning, everyone. It's Friday, November 4th, and wanted to um, talk a little bit today about the 1031 DST exchange. I've got a lot of clients right now that are, looking to get out of the active management side of the real estate game. So they've got, some multifamily properties, maybe some retail commercial properties that they're looking to sell, and right now they're looking for other opportunities to invest that money through a 1031 without having to go out and purchase another real estate asset that they'll have to either manage themselves or hire a manager to do so. So, what I wanted to talk a little bit about today was the ability to utilize the 1031 exchange through a Delaware statutory trust, which we've aligned with a good company, very, very good REIT, reputable REIT, that is actually offering services for some of our investors that are looking to get out of their current real estate investments and get into the 1031 REITs. Talking a little bit about it, how it works is when you sell your asset, and just a little bit of background on the 1031 exchange. When you sell your asset, typically if you're going to sell your asset, you're going to have to pay capital gains taxes on that asset, unless you utilize the one of the best tools the government has to offer when it comes to tax sheltering, and that's the 1031 exchange. So unless you're utilizing a 1031 exchange, you're going to have to pay capital gains tax. So what a lot of clients are doing is they're deferring that tax and utilizing the 1031 exchange to purchase additional property. However, with a lot of my clients looking to get out of that active management or get out of the real assets of real estate and looking more for something that's going to provide an income without, some of the other nuances that come along with owning a real asset, we've actually discovered a very good company out there that offers a 1031/DST exchange. So how it works, once you sell the asset, you have to have a qualified intermediary that acts as almost like a trustee. So when you sell the asset, the buyer is actually paying into the qualified intermediary that holds the funds and then transfers those funds into the DST of your choice. Now, there's lots of DSTs out there. Some are obviously much better than others. So you want to do some research on it. Our team has done a lot of research on it. So we've got some very, very good options that we can explore. But what this does is it gives you a good opportunity to go ahead and take advantage of the 1031 exchange without having to go out and buy a new property. So a little bit about the Delaware Statutory Trust. You don't have the same control over, buying a real asset. The Delaware Statutory Trust does take those funds and then manages the money via purchasing assets, manage current assets, and expand the portfolio in that way. But what's really interesting about this opportunity is after 36 months, you are actually able to do what the tax code calls a 721 exchange into a REIT. And typically, they're non-tradable REITs, so non-public tradable REITs. And but what the difference is this actually gives you an asset that can be divisible. So if you've got beneficiaries within your family that you want to split up the actual assets to, you're able to do so much easier. And it kind of trades almost like a stock. It gives you that more flexibility than what you'd get with the Delaware Statutory Trust, and even more so what you'd get with a real asset, that your family or heirs, if you were to pass that down, would have to, figure out if they're going to manage it or if they're going to go ahead and sell it. So there's lots of different advantages to this. I've put together some information that I'm going to include in the link down below. But I do think this is something that a lot of our investors are going to be looking into. And actually, I've got an investor I'm working with today on our property we're selling for him, and trying to get them set up with this company, and he's going to go into the 1031 DST, and we have a lot of high hopes for this. We think it's going to be a really good option for those that are looking to get out of the typical real estate and into something more passive, but they still want that income. So that's the beauty of this. You can maintain your passive income in real estate. However, you're not having to deal with the day to day or some of the other many nuances that come with owning a real asset, an apartment building, a retail, commercial site, industrial, whatnot. So I'm going to share some information below. We're going to continue to do some videos on this. I'm going to put together a webinar as well that I'm going to invite any of you guys to join, in which we're going to do a deep dive into how this works and, kind of the benefits, the costs, and the structure overall, so that you guys have a little bit more information and can make a informed decision on what you want to do. But I do think this is something that a lot of you guys should look at if you're looking to get out of some of your larger real estate investments and into something that is more passive, but also provides that level of income that you'd like to keep getting. So feel free to call me or email me below with any additional questions you have specifically on this, but we'll include some information and then we'll follow this up with a webinar. We'll try to get it done next week, probably later on in the week, but we'll have details of that in the link below. All right, guys. Well, have a good rest of the day and a wonderful weekend. Talk to you soon.